So it took a while for global markets and global businesses to really get the memo about the coronavirus outbreak in China, but I think it's safe to say they have done now. Global markets have been in freefall for the best part of 3 weeks or more even, and global business confidence has collapsed. Guys, from your point of view, how bad are things? Jonathan, what is business confidence looking like now?
I think it's terrible. I think that we're seeing a situation where a large number of businesses, including some quite large ones, are going to go bust quite soon. We'll see very large numbers of redundancies. And this is really an emergency situation where they have to act, and they need to act quite strongly and quite powerfully in order to reassure people. I think it's the point when we can see quite clearly who's in charge in the world. It isn't powerful entrepreneurs and people on Wall Street or in the City of London, it's politicians.
Central banks and slightly later governments have really started pulling out all the stops to try and rectify the situation, right? So central banks over the weekend put together swap lines to try and enhance dollars flowing around the global financial system. The Federal Reserve in the States has absolutely thrown everything at this. It's cut rates twice. It's pumping money into the repo market. It's buying $700 billion of bonds. It made a very unusual step of coming in and making a big announcement right before markets opened on Sunday night. They're doing everything here, but can it work? I mean, Robert, from where you're sitting in New York, what's the sense of how the Fed can help here?
The sense is that the Fed can help at best modestly. So they are essentially a creature of the financial system, and at some point, there's only so much you can do by fixing the plumbing, as it were. The problem is activity. So, for example, they've done a lot to support the banks. Most recently, they cut the cost of overnight lending at what they call the Fed's discount window, made that money very cheap, and they've cleared their throat loudly, with the result that the large banks have all dutifully walked up to this window and taken some money out.
Because they don't normally like doing that, right?
No, there's a stigma involved, and it is similar to 2008, 2009, where you had TARP funds, Troubled Asset Relief Program funds, and none of the banks wanted to take them. But then the authorities tapped their foot, and Jamie Dimon and co. Shuffled up to the TARP window and took money. Similarly, the banks are taking money now. But the economic bottleneck is not at the level of the financial system. It's at the fact that, for example, New York City closed all its restaurants today, closed all its gyms today. People are going to get fired today, and they're going to need money next week.
You can see a whole series of sectors that are in deep, deep trouble. The epicenter of this is the travel industry, because they spend an awful lot of money on capacity over the winter period, which they expect to recoup in terms of bookings from the spring and summer onwards. You can see TUI, which is a huge European travel business, is in deep trouble. Airlines around the world are going to go bust. What they need is cash flow. Their cash flow is choking off, and that is what kills businesses. So this is where the government would provide assistance. Central banking is too indirect a means to provide reassurance. What's needed are very large packages of loan guarantees.
Markets are perhaps not the best way to judge how successful these central bank policies are, from the point of view that they're not trying to support the equity market, but nonetheless, the scale of the declines that we've seen in stock markets since this massive package came from the Fed on Sunday has been really something to behold. I think we closed about 12 or 13% lower on the S&P on Monday. So it's really clear to me that investors just do not know what to do next. There's quite indiscriminate selling what's going on at the moment. And that, again, is building up concerns that there's going to be more shoes to drop here, right? There's going to be not just airlines and whatnot that get themselves into financial trouble, but also a lot of funds. They're nursing extremely heavy losses at the moment. Some of them are not going to make it through this process. And a lot of them are having to sell liquid assets just to try and stay afloat in the short term and to meet redemptions and that sort of thing. Again, we're sort of looking at what can stop the bleeding here. I mean, Jonathan, what's going on the fiscal front? I know France, for example, has announced a pretty heavy-hitting package.
They have 300 billion euros of loan guarantees. And I think there's about 1 trillion overall are floating around inside the European system. And I think that it's something that governments have to do. They have to embrace it. They have to forget about moral hazard, which is the worry that if you bail businesses out, that they therefore will not take proper risk controls. We've already dealt with that over the period of the financial crisis, where we forgot about moral hazard for banks. I think we have to do it again for ordinary businesses that employ a lot of people. I honestly think the problems in the financial system, we shouldn't worry about them too much. I personally am not going to shed too many tears if some hedge funds go out of business. The question is whether they create systemic risks. Systemic risks should be pretty well contained, one would hope, because of the very high capital buffers that we've got now. I have produced solely, exclusively for this program, a small chart, which I'm going to show you here. And the finance ministers of the world can have this for free. There's no royalty is required. And I think it's showing really what the strategy is proposed to be, which is that the cash flows of business are collapsing because they don't have much demand from customers. You put loan guarantees in place so that banks can lend them at very low risk with underwriting from the state. And then you do some sort of big demand stimulus when coronavirus is attenuating, hopefully in 3 months, 4 months' time. And hopefully then you see cash flowing back through the system more naturally again without government support.
I mean, that's a good point. And in a way, what a lot of people are talking about now is all this stimulus that's coming from central banks and from governments. It's not really stimulus. It's these are crisis measures. These are mitigation methods. No one's trying to fire things up. They're just trying to stop greater disaster quickly.
I don't think this is the moment for demand stimulus. It's no good trying to persuade Americans or Britain to go out and go to parties and go to cinemas and pubs and clubs and bars, because that's precisely the wrong thing to do in terms of health. I think that stimulus thing needs to happen a lot later down the track.
One thing that bothers me, amongst many at the moment, is that the experience we saw in China is that certain cities were shut down for relatively short spaces of time, and then they're starting to try and get things back up and running. What if in the US and the UK and across Europe, these shutdowns prove a lot longer? It's clear that governments are struggling with the right model for how long people need to be kept indoors. I mean, Robert, like culturally, financially, how long can Americans stay indoors? How long can
Well, having been homeschooling my own children for 1 day now, I think 2 days is probably the absolute limit, at which point it's going to be anarchy in the Armstrong household, in the wider world. Well, one question is, decisions have to get made about which workers are essential and under what conditions they will work. So for example, in the city of New York, they're setting up special schools for the children of first responders. If we're stuck at home, we need the internet. We need water to keep running, and the heat and the electricity and everything else. The miracle of this call is made possible by workers somewhere. So who are the essential workers going to be? Who's going to take care of them? What are the measures for them? And so who is in and who is out in terms of the mobile, the ambulatory workforce?
But do you think the assumption amongst, in corporate America now is that this will be a short shutdown, or do you think that the world is waiting for something much longer now?
I think it's important to emphasize here how little we really know at this point. We're sort of staring off the edge of the precipice now. So, for example, American Express had an investor call this morning, and they said actually, as of Friday, spending was holding up. Patterns were changing. Obviously, there were some dislocations, but they think their Q1 revenue will still grow a little bit. But no one thinks that is going to keep happening this week. So actually are waiting to see what the patterns of consumer behavior and business behavior are like now that it's real.
It's not just the scale of the declines that we've seen in stock markets or in high yield bonds, for example. it's the speed of this thing. I mean, you know, we've gone back to '08 levels on a lot of kind of metrics of stress in the high yield bond markets, but this has happened in a straight line in a way that we don't really have any precedent for. And investor confidence has, you know, just like consumer confidence, like you were saying, Robert, it's just effectively fallen off a cliff.
You can't overstate the level of ignorance that we are all operating under.
Yeah.
So I think we all fall into the trap of thinking that somebody out there really knows what the coronavirus is going to look like in a month. Nobody knows that. Somebody knows what bank stocks are worth right now, we'd like to think. Actually, nobody knows that. That's why they're off a third. That's not showing you that banks are worth a third less than they were a month ago. What it's showing you is nobody has any idea. So I think we have to be cautious about attributing too much information to markets. What we're seeing now is a market that's struggling with really low information.
Yeah. So given that nobody knows what on earth is going on and no one knows how much anything is worth anymore in markets, what do you think of this idea that we should just shut them down?
I think it's an absolutely terrible idea. And I know, Katie, that you think we should do this, but the problem with closing markets, which does sometimes happen, and certainly it happens quite a lot with individual stocks when they're suspended, is that you can do a whole lot of things that you hope will improve the situation, but when you reopen, it's pretty unpredictable. This is the jeopardy of, in a very much larger sense, that investment bankers go through when they try to price an IPO, and they really don't know whether it's going to go up or down when the market reopens again. I think as long as markets I kind of do have some faith in circuit breakers, because I think they can halt intraday strong trading motions, which also include ones where you've got momentum following computer trading systems. But I think overall you need markets open to provide a feedback mechanism. You close markets and then governments produce all kinds of what they hope are safety net and stimulus packages, and you reopen and the markets crater, then that seems to me to be even more destructive than leaving them open and putting up with the volatility. But you doubtless have a different view. What is it?
Well, I have a different view from the point of view that it would really help my stress levels if I had a lot less. But I do think the idea has some merits, and I think that the way we're going at the moment, the markets, yes, the circuit breakers are working, but there are periods where liquidity is so bad and moves in really important markets are so jerky that you just think, are we going to get some sort of financial accident layered on top of an economic crisis, layered on top of a health crisis that would just make matters worse? It is interesting that we've had the markets in the Philippines, granted not one of the major global markets, they've shut down. There are short selling bans, which again are sort of different, that have been instituted across Europe for temporary periods. I'm not sure it is definitely the right way to go. I think that it is something that is worth thinking about. What do you think?
I think you have to weigh the benefits you just described, Katie, against the risk that having markets closed would cause a little bit of, I don't want to say panic, but unrest.
Yeah.
Sense that people have lost their autonomy. The government has taken away their right to manage their retirement savings as they see fit. Could make people significantly anxious. My father, 7, is one of the few people left who remembers in person the closing of the banks in the 1930s. And he had my mother march out to the ATM the other day and take out a pile of $100 bills. And you don't want the entire country to turn into my father.
No, I think that's a good point. We've covered a lot of ground here and we're going to have to wrap it up there. But Robert, Jonathan, really nice to talk to you. I hope to see you in person at some point soon. Take care.
It will happen, Katie, whether you like it or not.